Hello, this is Evan here from the Trade Risk on Wednesday, December 29th. 2 more days until the new year. Happy early new year. We are intraday right now, and this is our weekly swing trade ideas video where we bring you stocks based on specific technical setups and criteria, all of which we're going to break down for you in just a moment. And as always, these videos are sponsored by our partners over at Investors Business Daily. We curate our long ideas using their stock lists, and you can get access to those stock lists with a link in the description right below this video. So let's jump into it here. We've got a handful of different ideas we're going to run through. We've got a couple of bullish, couple of bearish, and a couple of just sideways consolidations that frankly could resolve in either direction. So let's start off with BNTX here. This is coming from our gap down and strong close tactical scan. So all of these ideas we're running through today, these are based on specific technical stock screeners and scans that we've built out for TC2000. They're all on our website. They're available for download. So if you are a TC2000 user, you can duplicate and you can get these scans on your workstation. So this one is our gap down strong close, and what this is effectively looking for is a stock that has been, sort of beaten up a little bit in the short term. You can clearly see that's the case here for BNTX. It's been in this steady downtrend, and what it's looking for at that point then is a gap lower on the session. So you can see, frankly, today was about a 2.5–3% gap down, and you see the selling sort of dry up here. You see the sellers fail to kind of take it down any lower, and in fact the exact opposite happens. The stock reverses and then starts to get a little bit of legs to the upside and closes the day pretty strong. So we have that taking place right here in BNTX. This is what I would consider a tactical kind of multi-day swing trade setup. You're looking for a strong close. We're recording this a few hours before the close, so we'll need to see if that can actually happen. But the idea here is you're looking for a bit of a snapback rally to the upside. And again, this is sort of a more advanced kind of tactical scan where you need to be able to manage risk and cut your losses if things move south against you. But here you go. It's a bit of a counter trend trade, and BNTX kind of coming back down, a little bit oversold, coming back into these prior demand areas here back from September and November, and like the potential here for kind of just at least a multi-day snapback. So that's our first idea coming from our gap down strong close scan. Let's go to number 2 here, which is DDS. This one is coming from our tight highs scan. And so what this scan is looking for is essentially, exactly what you have here. I'm going to expand this a little bit so everybody can see. And you basically get this cluster here of very tight highs where the stock is forming just very neat sort of orderly resistance. It really kind of frankly goes back throughout the whole month of December, but it's really keying off of these past 5 days where the stock keeps bumping up against this 260 area and can't quite get above it. And so once that tight range is identified, this scan is going to highlight that and then sort of present this as a potential sort of breakout opportunity here. Now, Dillard's has, been in this consolidation phase for pretty much all of December and had a rough end of November, first week of December as it sold off aggressively from 400 down to 260. But here it is, trying to hang in here. And the idea now is if it can, break out, close strong over 260, you might be able to get a kind of multi-day pop back up in towards, the upper 200s here going into the new year. That's obviously the hope, the idea of this trade. Risk is defined, level is pretty defined here. This is coming from our tight highs scan on our website. Let's switch it over to the bearish ideas. We've got FOCS on the first one here. And what this is looking for is, or what we're looking for here is this sort of bear looking flag here. So it's this little sort of aggressive rebound here within the context of a clear downtrend. So you could label this a flag, a wedge, doesn't really matter. I don't look too closely on the definitions here. What's this effectively looking for, though, is just this snapback here. You saw the heavy selling volume. You saw this levitating higher here on lighter volume, and it's sort of looking at this potential rollover here. This is a bearish idea if it triggers to the downside. And again, for all the things mentioned, we're in a downtrend. We saw that heavy volume. We've seen now the snapback rally. This is sort of where we would expect sellers to press if this in fact rolls over. So So as always, no trigger, no trade. If this doesn't make sense or fit your time frame, risk tolerance, all that fun stuff, then clearly it's a pass, and this is something you wouldn't want to take. But if you are looking for short exposure, if you like the setup here and you like the potential to kind of roll over, then FOCS to the downside would be one to pay attention to. Number 2 on the downside is DT. This one similar, but maybe a little less pronounced here on its snapback. But you've got kind of the same thing where you've got this clear downtrend that has been in place here for a little over a month now. And once again, you're getting this sort of snapback here. You're getting this rebound to the upside. And in this case, you're kind of coming back into prior supply resistance up here, kind of a messy area. And again, volume has kind of trailed off. And again, volume here is kind of suspect just because it's the end of the week, end of the year, holiday time. So we do generally expect the market to have lower volumes around these times. So of course, you need to keep that in mind when you're looking at some of these scans and analysis. But generally speaking here, downtrend, lower lows, lower highs, you're getting a kind of a snapback here. And if you are looking for bearish ideas, if you're looking for stocks to the downside, look for this to roll over, maybe move back down into the mid 50s. So those are 2 bearish ideas. Let's go to sort of the neutral ideas. These are just consolidations, generally speaking, that could go in either direction. So we have a scan on our website. It's called the Ultimate Consolidation Scan. And this one here, excuse me, is coming from our short-term consolidation scan. And so what this is essentially looking for is looking back over the past week or two, and it just wants to see a stock that has gone nowhere. It just is moving sideways, lots of overlapping bars, sort of fueling up for a potential breakout. So for SIG, you can see long-term trend is up, short-term trend is down, and it has been moving sideways here over the past 2 weeks and trying to make up its mind. So really, you're kind of looking at this with, opportunistically here. I think if you can start getting closes over 86, you could maybe get that breakout to the upside. If you start rolling over back below 80, then you might get that opportunity for another leg lower here. So SIG, short-term ultimate consolidation scan. We can go to VGR. This one here also coming from our short-term consolidation scan. Now this one here, certainly more poised to the upside, to the more bullish side. You can see it's a stock that's not quite at all-time highs, but it's been in a uptrend here for most of the past 12 months. And you can see, again, it's trading at 52-week highs. You look past over the recent week here, you've got this nice, very tight consolidation taking place at 52-week highs. This one here, more of a clear sort of potential upside breakout candidate. If it can start moving over 1740, that's the ultimate consolidation on the short term. Let's move to an intermediate term. And excuse me, what this is looking for is consolidations that are taking place over the past month or so, the past handful of weeks. You can see ZUO, this one here, tech space, broke down in mid to late November, has been moving sideways between, let's call it 18 and a quarter to about 20. And you can see now it's just got a lot of overlap, a lot of consolidation here, and it's in the middle of that range. So we're just kind of waiting and watching. And that's what we're looking for, is planning out potential trades. And for this one here, I think you've got clear lines in the sand below 18 and a quarter, above 20 and a quarter. That's sort of your breakout zone you could be looking at long term. It is, over the past 12 to 24 months has been trending to the upside. So we'll see how that trend shapes up going into the new year. Let's go through a few more here. Cboe, this one here also coming from our intermediate term consolidation. You can see essentially over the past month or two, this one has gone absolutely nowhere. It's just very, very tight. Lots of sideways bars here. The long-term trend has been up. It's consolidating over the 2020 highs. And so for this one here, again, you're just looking for a breakout of this range. Last but not least, FLEX. And we're going to have to zoom out because this comes from our long-term consolidation, our long-term ultimate consolidation. So this is looking back multiple months, and it's looking for stocks that have gone nowhere. This one very much fits the bill. So this one here, tech sector, electronic components, you can see over the course of 2021, it has moved dead sideways here, 16 and a quarter to about 1970. That has been the range it's been in. And you can see, again, lots of fuel in the tank. It had a good end of 2020 run up. It was up about 100% in, just like 2 months time. It's now consolidating sideways here. If we zoom out, it's taking place at, this old 2018 peak. So FLEX, take a look at this one here on that long-term breakout if that's your time frame. So that is what I have for you today into the end of the year. Handful of different trade ideas. Again, do your homework on all of these names. Make sure they don't report earnings. Make sure they fit your time frame, risk tolerance, and all of that good stuff. So with that, I want to thank you for tuning in to another video. Hope to see you back here in the new year. Always every Wednesday, trade ideas just like this. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great rest of your day. We'll see you back here in a future video.